I'm back. Welcome to the Big O Money Show. Bill Altman here with Tony Shore. Wow. I'm pumped. We got a great show ahead. We're going to talk about a lot of things. Lots going on. No doubt about it. Rates coming up, Tony. That's not what we really like to see already in a little bit of an elevated interest rate environment.
Yeah.
So that definitely slows things down a little bit. I think the Fed really does need to jump in at some point and decide to, halt or not halt. I mean, they've been halting, but halting is increasing their rates right now. So what they're doing is rates are actually going up. The Fed can do their things on overnight rates, right? But as for how the market reacts to that's going to be different. So your treasuries are going to react differently. It's not like he's like, oh, I'm setting all rates at 6% and then all rates are at 6%. That's not the way it works. We're talking about an overnight rate that he sets, and then all rates respond from that based on consumer confidence is one piece. What people, how are we feeling about the market? People are a little nervous. I mean, there's no doubt about it. Right?
Yeah. They are because of oil prices. And, every day it's like yesterday it stayed the same. The day before it went way up. Today it's down just a hair. You can go crazy if you watch it day to day. But if it stays around 100 or over $100 a barrel or over for any extended period of time, that's going to start to really cause some problems.
Yeah. People are going to feel it in the pocketbooks, no doubt. And they're going to put a halt on what they're doing, which is going to put a halt to the economy, which the Fed kind of wants, but our economy kind of still needs a little oomph, built in. We have a lot of action, a lot of things going on right now. And so we're going to address them. We're going to talk a little bit about them. We've definitely had banner years. There's no doubt.
Market's been
great.
It has been.
And what we continue to see is it's not always, and it's not what's going to continue to happen because we don't know. We don't have that crystal ball. But let's point out Target. Target beat earnings. They crushed earnings. Yep. And that's coming off of not really thinking they were going to. I mean, it was
right. Everybody thought, man, Target might be hurting.
But what do we have there? We have consistency. We've talked about it before on the show.
Yeah.
We have nice push carts, your shopping carts. It's weird to say, but it's the truth, right?
Yeah. People go to Target because they know Target always has new shopping carts. They have clean stores.
Mm-hmm.
They have a little higher quality merchandise in many cases.
My daughter, Michaela, the middle, she goes and she shops at Target for clothes. I guess I've learned this. She's back from college, back from Tennessee. T is for Tony and for Tennessee.
Yeah.
But she shot and she's like, yeah, for $20, I got this outfit. That's pretty sweet, right?
Yeah.
$20. You can't go to Lululemon and I don't think a price of admission is more.
There's nothing in the store for $20. There's nothing that inexpensive in the entire Lululemon. You better have. It starts around $100, and
if you're not pulling in your Ferrari, you're just not coming in. Tony and I tried to walk into a Lulu at one point. We were turned away.
They call the cops. What's that guy doing here?
Someday, Tony, we're thriving to get there. I'm going to work really hard, Tony, so we can do it. Okay.
Yeah. They don't sell anything that would fit me in a Lululemon. So
we'll get in something.
No reason to go in there. Yeah. It might be a little tight. My daughters also shop for clothes at Target. They love it.
My wife does too.
Yeah. Same.
Yeah. And
they love it.
Too. And so you have good quality merchandise. You have nice shopping carts. That's weird to say, right? But I'll go into other places and drive something, and it's like blah, 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 blah.
Yep.
They have it's just the consistency, the cleanliness, the consistency, the friendliness of the employees, those type of things. That is our G50 stock portfolio.
Yep.
Isn't that awesome?
Huge.
And if you look at how it's done, and I'm not going to talk about how it's done this year. It's done well. Okay, I'll just say that. But and what it's done now doesn't mean what it's going to do later, and who cares what it's done before. I mean,
the past few years and so far this year, it's doing well.
Overall consistency over the past decade's been solid.
Yeah.
without a doubt. There's no doubt
It's
about
a great portfolio. It has been in the past anyway. And again, like you say, past performance, nobody has a crystal ball, but you have to look at this thing. I mean, we have, you look at the stock market, you have 100 years of history to look at.
that. Right.
It would be crazy not to. The experts, the senior portfolio managers of these great portfolios like the Gradient G50, they look at it. And so, well, they're not, no one can accurately predict the future. When you have 100 years of data, it does help. You have an idea.
Well,
It gives you an idea.
not only do you have 100 years of data, but you have 50 stocks that have consistently paid dividends every single year, right?
Right.
Typically 4 times a year. You
Yeah.
have 50, so you have 200 dividend payments. You're almost getting paid every day of the trading year.
Yeah.
And so you're getting paid on your money. These are performers. These are companies that have, and I'm not, telling you to go buy the G50 or that's what you need, because everybody's situation might be totally different.
Sure.
But, we're talking about in general. What do we do in markets that are high and chunky and volatile, and Iran and craziness, and the war's over, the war's starting, and everything's crazy, right? Everybody's crazy.
Right.
What do we do during times like that? Well, we kind of shore up a little bit, right? No pun intended, Tony Shore. But we try to shore up a little bit. We say, hey, let's try to get a little safer. Let's not maybe be so greedy. Let's play the Warren Buffett. And when people are greedy, let's be a little fearful. And when people are fearful, let's be a little greedy. Let's kind of play that role right now. But because I think it's kind of a mixed bag. I think people are a little nervous about what's going on, but I also think people are they're really chomping at the bit too, which is fine. It's good. It's good for the economy. But what happens during that time is you can, if you're trying to time things, you can really lose your rear. Okay?
Yeah.
And we don't want to do that. And as we approach retirement, Andrew was talking, I was listening to the show last week, and you and Andrew were on, and you were talking about Insure. Oh, it's a great story, actually. And Andrew told it, but I'll tell it better. So
holy jeez, look at this one.
So no, and the reason I'm going to tell it better is not because I can't tell a great story, but it's because I was actually there, and so my son and my son was home for a couple of weeks before summer session started. He's working at again, for new listeners and all the other listeners that forgot, Braden is going to be a senior at Auburn University down in
senior already. I can't believe it.
Wild. Right, we were just kicking this boy off a couple months ago. It feels like. But so he's going to be senior at Auburn University. It's in Auburn, Alabama. Aerospace engineering's major, and he's doing awesome. By the way, 4.0 last semester, just cranking, crushing, awesome, love it. He's such a great kid, love him to death. I'm so happy to have him back. I'm in a house full of girls. God save me. And so he was back, and I was like, oh God, thank you, Lord Jesus. So anyway, sidebar.
Sure.
So Braden, we're sitting there talking, and we're talking about a client's house, and this client has a lake house. Okay. And, talking about, he's not always there. And so we're going to put cameras up, a couple cameras on the outside. So when he's not there and he's at his other place, at his normal full-time residence,
sure,
we can pull up the camera and make sure the place isn't burnt down or it's not flooding. Right. That's simple enough. Those are really major things. And, and then he can do certain things, like you can get a good friend. He worked for a company mowing, and he has a flow by mowing. His name's Craig, and Craig is.
Oh yeah, we've had him on the show.
Look at these. Yeah, we've had him. He helped look at these flow by mowing devices that, and I'm not touting mowing, and they're not paying me for this commercial, but I do use them on my properties, actually. Okay, my office and my home. And if it detects unusual water usage, it shuts it off, and you can kind of program it, and then it's smart and it learns and all that kind of fun stuff. So, okay, so we got cameras, we got the flow by mowing, so we pretty much should be covered, right? But what if something did happen? And there's a fire. Let's say there was a fire. You're not there, and fire, lightning, whatever, who knows? Well, we have insurance for it.
Yep.
Right. And so it burns down, and that would suck. We don't want it to burn down, because then you get to rebuild it. Maybe some people do, but I don't want any of my stuff to burn down.
No.
So maybe then you can you get an insurance check. Okay, fine. So it burns down. If it floods, well, you have insurance typically, right? Sometimes some flooding doesn't cover, this and that, whatever. But typically insurance would cover that. If there's a break-in or a robbery, typically insurance would cover that. Well, how about your health, Tony? I mean, if you got sick today and you got to go into the hospital, are you going to stress about the bill?
No.
Not really. I mean, you have a deductible and a copay and whatnot, but it's not going to bankrupt you, right?
No, because I have insurance.
You have insurance. And then if you died, you probably have some sort of life insurance potentially.
Yep.
Right. And so your wife, Sarah would be able to at least cope. I mean, it's not going to fix it. It would not be a good situation, but at least things would be able to be handled monetarily.
Yeah.
With items, and basically kind of replacing your income for a little bit or paying off a debt or whatever the situation is. So we have insurance for that. So we have insurance for all these things. And then so I was talking, I was like, Braden, this is a great conversation. So it's my 20-year-old son. He's gonna be 21 pretty soon. He reminds me of June 30th. But that'll be another day. So he says, well, what else do you insure? And I said, in our business, Braden, we insure life, we insure health. Brenda and Bill Kaiser on the Medicare side, right?
Yep.
What we also insure is retirement. And it's like, what do you mean you insure retirement? How do you insure retirement? Well, if you have a couple different buckets of money, and let's say you have a safe bucket and a bucket that's in the market, you have two different buckets. And the bucket in the market doesn't have to be risky. Right. It's going to be in stocks. Let's call it stocks. Let's call it the G50, 50 dividend.
Sure.
Stocks, US blue chips, always pay dividends, always increase their dividend payments year over year. That's the profile for that G50 portfolio. So you have, a portion of it in the G50. You have a portion of it in some type of fixed income situation, whether it's fixed income in the markets or it's fixed income in an annuity. You are buying protection for the future. It all hits the fan. Right?
Right.
And you're like, oh my gosh, what do we do? The market's not going to come back. And Rocket Man sent a nuke and we're blah, 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 blah. What if you had something in your back pocket that is going to secure the income that you need for the rest of your life and your spouse's life? What if you had that? You have your stock portfolio that's doing its thing. It's going up, it's going down over time. It goes up, always has over time. Over time, it's always gone up. But what if you had the other piece that you never had to worry about? The piece that you could pull out if it all hit the fan.
Yeah.
And that's the piece that we look at. We insure retirement. We insure your life. We insure your health. We insure your retirement. I want to make sure that everybody has that piece. I want to make sure that your estate planning is done. We can, we're not estate planners per se. I'm not a lawyer. Andrew's not a lawyer, but we work with some really awesome attorneys that can do your estate planning. What's do your estate planning mean? A will, a powers of attorney, a living will, your advance directive, which is typically your
trust,
your trust, whatever it is, but getting it funded, getting it proper, blah, 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 right? That's what we want to make sure is done and taken care of. So we can ensure that entire piece. That's big time on us. That's what we want to make sure it's done for you. So I know that's what you and Andrew talked about last week, and it's really, really important. So people wonder why we do things, why management is so important. I had a boss years and years ago that would talk about why management. He actually worked for the airlines, and I think he wrote a book or wrote a something on this whole why management. Like, why are we doing something?
Yeah,
not just doing it. But what's the reason? We try to teach our clients that, and so that's something that I want everybody listening to the show to understand, that we want to teach you the why piece.
The why is important, isn't it?
The why, yeah, it's not just saying we're going to do it. We're going to buy
Yeah.
Apple stock. Well, why are we buying Apple stock? That's a good question. Why are we buying Apple stock? I don't know.
Right.
Does it fit in Tony's portfolio? I don't know if it does or not. I don't know if you should have it or not.
Well, I'm a big fan of Apple. Oh, that's not the reason to buy it, though.
Not necessarily. That's
Sometimes
right.
people do that. Yeah, yeah. And I just want to say, yeah, I think what you're talking about when you say you can insure your retirement, people are like, wait, what? Like life insurance? No,
Nope.
we're talking about ensuring that you won't run out of money in retirement. There's a way to insure against that happening.
Insure your income. Insure your income that has
Insure
never been a
your
default in
income.
history. Companies that have never defaulted in history. Industries that have never defaulted in history.
Yeah.
Use companies like those. Companies that keep 100 to 105% of the guaranteed benefits on reserve at all times. Companies like that, not like FDIC. I'm not saying FDIC is going away, by the way. Okay.
Right.
Because government, they're just going to rob Peter and pay Paul. They're going to send Tony and I the tax bill, and so we can shore it all up, right? Same with Social
Right.
Security. With Social Security going away, Social Security ain't going away. You got to be
No.
kidding me, man. Been around for almost 100 years. You think Social Security is going away? No. First check, 1940, Ida Mae Fuller received her first check, woman, United States. Fantastic. That was after the famous fireside chats given by FDR. And all of a sudden you have the Social Security check. You think Social Security is going to go away in 2025? Come on now. What are they going to do? Oh, you think they're going to reduce it? Everybody's going to get 75 cents on the dollar? Yeah, right. Yeah, right. They're going to rob Peter, pay Paul. They're going to increase taxes. What do you think that would do if you decrease Social Security benefits for everybody? Oh, yeah. People living paycheck to paycheck on Social Security, all of a sudden they're Medicaid, and what happens? They go back to the government anyway, get a check? No way. Government knows that. They're not going to do that. So this is all like craziness people are talking about. Now, do I think it's broke? Absolutely. Of course it is. Right. But that doesn't mean they're not going to find the money, because they would just print their way out of it. We know that we print their way out of it. So what are you and I going to do? We're going to go tell them and go stop, go up to Washington and be like, okay, stop that right now. And I want the gold back in the reserve, and I want Social Security to be shored up, and I don't want any taxes for anybody, and I want to go back to the way it was. Yeah, right.
Yeah.
Yeah. So what do? We handle it a different way.
Right.
And we insure ourselves, and we look out for ourselves. We look out for our people. That's what we do.
Yeah. Yeah. I think that's a great distinction, and people have to realize what you're talking about is strategies, ways to ensure your retirement income, and that it will be there as long as you're there, regardless of the markets. And back to that, I just wanted to say, Bill, on the positive side for our listeners and viewers, I'm always blown away at the resiliency of American companies and our markets, because with everything in Iran, with the cost of oil, I thought, okay, here we go. Markets are going to tank. During this time, markets have had some record highs at points. Our market is so resilient, and it's really it has nothing to do with what the President Xi in China says or President Trump tweets late at night. Those might influx a little bit on one day for a few hours, but the market overall is company earnings, right? I mean, and our company earnings have, like you said, it's been strong,
really strong. Absolutely.
And it surprises me. It shouldn't surprise me, because our markets have been always resilient, but I mean, it's pretty resilient right now.
Yeah. And definitely resilient in the long term too. Right. And we've seen that. So again, we can draw our line from 1926 to 2026, and we're going to see a line that goes nice diagonal up, and everybody's making money, getting rich, fat, and happy, right? But at the end of the day, interim is a little different. You're 65 years old and retiring in a market like this. I don't know. I'm probably going to go I'm going to go a little safer, to be honest with you. Just because you got there, right? So you did it.
Right.
You started, and you're 18 years old. You become your adult, or 19. Nebraska, Alabama too is 19. So you get that to that point, and you start start working. You have some kids and a wife or a husband, and and then all of a sudden 45 years goes by, and you're 65 years old. And it's like, oh smokes, that was tough. That was a deal. It went really, really fast, but there's a lot of ups and downs, and some of them are pretty scary, and so if no one had those scary points of the ups and downs, I don't believe you, so I'll say that. you know?
Right.
And if you have no regrets, I don't believe you. You like that?
Yeah.
Regrets.
Regrets.
You ever seen
But
that
yeah,
tattoo?
no regrets. Yeah, no regrets.
Okay, gotcha. Okay.
I got it. I
Yeah,
got it. That's a
okay.
funny one.
You're a little slow, but
The
that's
no
cool.
regrets tattoo. Yeah. Whoops. Everybody has regrets,
Whoops,
including
there
the
it
no
is.
regrets. Yeah.
Yeah, yeah. But you run into those type of things and you're like, no, no, time moves really, really fast. So then you get to a point we've talked about, several weeks ago, whenever it was, or a month ago, we talked about a client that comes in and he is successful, built a great business and has rental homes and has his own other business and everything's great and healthy and happy and kids are doing great and everybody's great, right? And he's like, yeah, I'm done. I'm good. What do you mean? Yeah, I just want to go safety. I want everything 100% in safety. I'm like, really? You don't really need to do that, because we can have a little bit bigger engine under the hood and you could have a little bit of risk and still be fine. You're not going to, I know your income spending, you're not going to outlive it.
Yeah.
We're pretty good. No, I'm good. We'll go all safety. So you get to the point where it's enough is enough. Right. I did have a couple other things, not to get crazy on all that, but I think we talked about interest rates. We talked about how we feel about markets and what markets are doing and kind of how to protect yourself and ensuring retirement and all that kind of fun stuff. But it's also important for all of us, me, Tony, all of our listeners, to remember that we're also, as we get older, we're teachers, and we got to pass this skill down. Whatever skill that you have learned, acquired during your life, you pass it down. So me, I'm passing it down, of course, to my kids. I'm passing it down to my employees and teaching them and really allowing them to learn. Why is Andrew on the show sometimes, a couple weeks in a row? Like, that's not by accident.
Right.
Tony, I've done shows around the world. I've taken my mics everywhere. You know that. But if I can give somebody else the opportunity that's quite a bit younger than me to learn and to do, I want to do that. So that's
You
why
got to push that
sometimes
baby Andrew bird out of the nest.
I'm
He has to
pushing
be
it. I'm
pushing.
pushing,
He has
baby.
to learn to fly on his own.
Yep, no, get that Pitocin out. I'm pushing. Yep, whatever you call it.
Wow. Okay.
What?
All right.
Off of that. But so that's one piece. Another thing is, man, we've dealt with some situations, no doubt. It's raining it's pouring this year. It's nonstop. Another death. Best friend from childhood this week. Bless his heart. It's not super public yet. But when it does become and the family releases all that, then we'll say a little prayer blessing for him on the show. But mental health is a big deal.
Oh, yeah.
Right. And we gotta pay attention. We gotta watch what's going on and not judge. I think that's really important. And help. If you see something, say something.
Yeah.
Those type of things. And it's scary. It sucks. Bottom line. I
If
found out
something
about
seems
it.
off, try to help.
I
Yeah.
found out about it earlier this week, and again, best friend growing up. So it's a weird deal, and I just want to say to everybody out there, talk to your people, watch, respect, don't judge,
Right.
do your thing, man. Reach out, be that human that God placed you to be. With that said, we're going to wrap up our show. Can't wait to talk to you all next week. Give us a call, 402-557-6730 for your complimentary consultation here at the Premier Advisory Group. Again, 402-557-6730. And you can always go to the web of bigomoney.com.
All right. And that does it for today's episode of the Big O Money Show with our host, Bill Altman.